The time to purchase Bitcoin is still early if you are doing so now. My opinion is that it is not too late. Therefore, if you have no exposure to Bitcoin and you feel as though you have lost out on something, you should know that 95% of investors have no exposure to Bitcoin. Therefore, if you acquire Bitcoin now, you are still in a very advantageous position. When you compare Bitcoin wallets to the internet, you can see that we have returned to the levels that existed in 1996. In 1996, the internet saw a meteoric rise, so we are still at the very beginning stages. 95% of investors know nothing about Bitcoin, and 99% of investors know nothing about XRP. Therefore, that is the reason why I am playing the footage that Tom Less has provided here in today's video and breaking it down with you guys. To tell you the truth, I do believe that Bitcoin is a strong and sound investment, but I believe that XRP is one that is tenfold superior. In addition, I believe that the month of July, for example, is going to be more explosive than the months that came before it. Due to the fact that, to put it more simply, we have the option to amass it at a very appealing price before rate cuts do occur towards the end of the year. This represents a far better opportunity than the ones that have occurred in the months that have come before. If you were told that you could get XRP at a price that is 1/10 of what it will be at 3 months from now, the question is whether or not you would not take advantage of that chance. Since I am being really honest, I believe that this is the opportunity that we are currently in possession of. As a result, I am not going to let this opportunity slip through my fingers. When I was discussing XRP in November, I was absolutely correct in my assessment of the situation. The election supercycle was something that I discussed. Without a doubt, the price of XRP increased by a factor of 6 throughout the months of November, December and January. From that $3 top all the way down to where we are today, there was clearly a correction that took place. We have in fact been trading in a sideways direction for some time now. However, I would like to bring to your attention the fact that I have been discussing and purchasing XRP for a period of 2 years prior to the occurrence of that election supercycle. I had lump sums that I had from 4 or even 5 years ago when I had acquired XRP during the previous naked market before that bear market. I was purchasing XRP in the marketplaces every single day, and I had these lump sums. Having said all of that, I would want to hear what Tom Lee has to say here, because he does have some incredible points regarding the future of finance, the debt of the United States and cryptocurrencies, all of which are included in the video that I am playing today. So that everyone can see it, you should slam that like button. Maintain your attention till the very finish. Let's get down to business. In your opinion, what is your overall evaluation of the market at the moment, and what are your expectations for the market in the second half of the year and in the year 2026? In the year 2025, the stock market was confronted with a black swan event due to the fact that the day of tariff liberation was a surprise, which resulted in a downward spiral in stock prices which dropped by 20% at the quickest pace, or one of the fastest paces in 100 years. There are just 12 instances in the history of the stock market in which the amount of loss and the rate of loss were comparable, and I believe that the error that a lot of people made was that they were pessimistic as a result of that shock. You are true in stating that we did believe that there would be a correction this year. The reason, however, that I believe we did not go pessimistic despite the fact that this was a significant decrease is due to 3 factors. In the first place, we were not anticipating that President Trump would adhere to the tariff provisions. Consequently, despite the fact that they first said that this was the contract and that everyone was required to accept it, we anticipated that they would eventually retract those conditions, which is exactly what has transpired. In point of fact, what we have observed up to this point is that the tariffs are far less severe than the majority of people believed they would be at the beginning of the year. As a result, we are in a more favorable position. In the second place, a great number of economists have persuaded you that there would be a recession. Is it possible that you recall all of these economists saying that a recession is certain to occur, which is the reason why everyone panicked and sold their stocks? On the other hand, we do not always pay attention to economists. Our preference is to keep an eye on the performance of the high-yield market. And the high-yield market, despite the fact that it displayed certain degrees of volatility, really moved in a manner that indicated there would be a growth fear. There is a distinction to be made between a growth worry and a recession for this reason. All that a growth fear does is cause everyone to become cautious, which is very normal. Additionally, the third reason we did not adopt a pessimistic stance is because waterfall losses such as the ones we observed typically result in a V-shaped rebound for the market. The idea that this would be a V-shaped bounce was based on this particular point, because the VIX, which is a measure of volatility, increased to 60, we were very persuaded that it was true. In fact, we were pretty convinced about it. Furthermore, if you take a look at the past 35 years, you will notice that whenever the VIX has risen above 60, regardless of what you believe, you are required to purchase the stock market because it is sheer dread. Due to the fact that the market is so terrified, they are not pricing anything, which is why you are required to purchase that. As a result, the stock market did a V-shaped bounce. I've seen that a lot of folks are still pessimistic. Despite the fact that we're getting close to returning to the previous highs, there is a possibility that those of you in the crowd are still being pessimistic. Since I don't understand why stocks have returned, I'm not particularly interested in investing in the stock market at this time. On the other hand, here is something to bear in mind. The year 2025 has already seen a drop of 20%. It is quite unlikely that there will be a 10% decrease between now and the end of the year. It is even possible that it is statistically 0%. The stock market could trade in a sideways direction for a short period of time, but the likelihood of us seeing a decline once again is quite minimal. The Federal Reserve is not lowering interest rates at this time, and Fed Chair Powell has stated that he is not lowering interest rates because he anticipates that tariffs would lead inflation to increase over the course of the summer. It's possible that this makes some sense. I would say that if someone were to suggest that to me, I would respond that I realize that prices ought to be going up due to tariffs, but it is not truly how monetary policy ought to be handled. Supply shocks are something that the Federal Reserve is intended to ignore. Therefore, if there is a supply shock such as a tax and it creates a one-time increase in price, the central bank is not meant to alter monetary policy for that, since they are the Fed, and they are attempting to manage demand. In other words, if there is such a high demand for something that it ultimately leads to an increase in price, then they will attempt to tighten monetary policy. As a result of tariffs, however, it is more comparable to a supply shock. It is recommended that the Federal Reserve check it out. The bond market is moving closer and closer to reaching that conclusion. The bond market did not agree with the Federal Open Market Committee during their meeting on Wednesday. They are of the opinion that the Federal Reserve should not be on hold, which is the reason why interest rates have actually decreased during the past several days. And that is exactly the point that we have been making, which is that the Federal Reserve, if they are not reducing now, they will have to cut much more the next year. It is possible that the majority of people believe that the sole reason for market rises is because the Federal Reserve is relaxing, which adds liquidity. People were claiming that the stock market couldn't bounce because the Federal Reserve wasn't going to supply liquidity, which is why the stock market was at its lowest point in April. Guess what, however? The bounce that we had was in the shape of a V. This demonstrates that the central bank is not required for the stock market to have a rise. On the other hand, we believe that they will make significant cuts in the next year, which ought to be beneficial to the stock market. As for positioning, I don't believe you truly conveyed our perspective on the many industries that we would be operating in this year. At the beginning of this year, the industry